Consolidated Infrastructure Group Limited released its results for the year ended August 2011 today. Highlights include a 17.5% increase in revenue to 1.4 billion rand. Fully diluted headline earnings per share of 100.51 cents per share, up 13% from 88.9 cents share last year. Trading margins are slightly up at 28.3% from 27.9% in 2010.
Consolidated's got a market cap of R1 billion, price earnings 9.6, no dividend yield. Tshepo, let's start with you. We'll come to the power part, which is what they really are. They've also got a little bit of construction materials, which is bricks and aggregates, roof tiles and the like. And that revenue went sideways at about 200 million. Profits went sideways. In this, those products in this market, sideways is actually quite winning.
It is. We're reading through the numbers. Maybe I'll take that as a bit of a positive theme for the construction sector. As you know, we've got heavy positions in that sector. I think that in particular is extremely pleasing, and they've done tremendously well. Yeah, sideways in this environment is brilliant.
There wasn't a lot of information around it. I mean, we can go and find out what they're doing, but they weren't telling us a heck lot about it. But it does suggest that certainly when the good times come back in construction, which me and you are both waiting for with bated breath, these guys are going to be scoring in what's a small area for them, 15% of revenue. Also suggests to me that it's good management.
No, it does. Again, I think more than just the construction bit of this company, a lot of things scream a good management team that's got this company firing on all cylinders, really, if I can say that.
Byron, let's touch on the renewable energy business now. They're quite excited about having launched that, and the SA government committing to source 15% of new electricity generation from renewable energy sources. But the problem is this is going to put pressure on working capital. I'd like to get your take on the company's strategy for working capital management and the extent to which that's going to mitigate some of the costs that they're going to incur in setting up the renewable energy projects.
Well, having a look at their financials, their financial position is actually quite strong. You know, they've got a decent cash balance and they aren't heavily geared. They sort of tick all the boxes that you'd be looking for in an investment. You know, they got big exposure to Africa. They're entering into the renewable resources. They've got a good yield, a decent PE, and again, like you guys have said, the management team definitely seem to be getting it right.
Is renewable, I know Basil Reid did an investors presentation a couple of months ago focusing heavy on the renewable. Stock was up 4 or 5% the day following. It's given all of that back. Renewable is one of those things we all want. I'm not sure we're going to necessarily get there in the time frames. And the flip side is government going to talk the talk? Are they going to put cash on the table?
It's something you're going to have to be patient with. It is a long-term view. And the better the technology gets and the more expensive oil becomes or inputs become, the more economically viable it will become. And then we'll see it start, you know, taking part. But in terms of government and that kind of thing, I still think priority is all about growth. Regardless of the environment, unfortunately at this stage it is more about people. And that is understandable from a government side. So maybe when we get to a position where, you know, we have more equality and that kind of thing, then maybe we can put a lot more focus on the environment. But they are talking about it and they do have plans. So hopefully, you know, they'll implement them.
Tshepo, just to add on to what Byron was mentioning now on the government, they're operating in 12 sub-Saharan African countries. Now, given the political risks and some of the legislative volatility in these markets, should we be concerned, number one, about how they're going to progress? I know they're mentioning urbanization and consumerism, and the infrastructure backlog in Africa is something that's going to count in their favor. But I'm thinking volatility and some of the factors that Byron has mentioned as well, should we be biting our nails?
I think any company that's going into any territory outside South Africa, you should be biting your nails, whether it's a mining company going into Australia and them bringing out new tax legislation, or a retailer going into Australia for that matter. I think the short answer to that is yes, we should be concerned. But I think the potential upside here far outweighs that. I think you're probably likely to see them suffering in 1 or 2 regions within the continent, as with any investment house. But I think if you're looking at some of the sheer numbers, only 25% of Africans have exposure to electricity. So from that perspective, the upside is hugely significant for them. So I like the fact that they're expanding into Africa and tapping into that.
And they do electricity from the other side, notwithstanding their renewables. They're not building the power stations, which I'm not sure about the actual ultimate margins there that the likes of Marion Robertson and will see. They're building the power lines, and that's a whole different game and a very, very niche game. In South Africa, their Conco, which is their power division, it's got 50% market share because there can't be many people with the expertise, the knowledge, and the skills to actually go and do those high voltage lines.
Precisely that. I mean, if you look at the margins that they're getting on that sort of business, I think it's 28% margin. So from that perspective, high margin, specialized type of business, which will serve them well, I think, especially within the African continent, where you're not just going to be competing in terms of best price, but who can actually do the job.
Yeah, so it's not that bun fight we see at the moment with any toll road they're building in South Africa. There are 40 companies queuing. Yeah, there'll be one or two.
Yeah.
Byron, it seemed counterintuitive to me that they would lower their debt equity ratio down 10% year on year, debt declined by 5 million to 98 million rand, and yet they have an agreement in principle to have a revolving credit facility of 100 million rand by the Industrial Development Corporation. So they're paying off debt on one end, and yet they've got this government facility being approved by the IDC. Your take on that debt management?
The government facility debt is probably cheaper than the debt they're paying off. So it's probably just default financial sort of playing games and making sure that that the debt is cheaper that they're using. But what I like about the company is that there's a lot of potential. I mean, everyone knows that electricity has become a constitutional right. And there are a lot of people in Africa that don't have access to it. So they're sitting in a niche market. My biggest concern with them would be, because they have 50% market share in South Africa, they probably have they do have big contracts with Eskom and the government. But to diversify out of that, there is still potential, because we're having Eskom now opening the grid to other companies, and they're going to be big players in that.
And so would you say hot or not then?
Yeah, I hadn't heard much about the company before this, but I was very intrigued and very interested when I started reading about them. And at these levels, I'd say hot.
Hot for
I like
Byron.
the fundamentals.
Tshepo, how do you feel, hot or not?
They're very hot. We actually hold it in our Super Dogs portfolio. So this is just the type of company that goes in there, top quality business on very good multiples. So yeah, no, definitely very hot for us.
Very hot for Tshepo, hot for Byron. Simon Brown, CIL, electrifying or not for you?
Look, I'm going to be boring. I'm going to agree with them. They've got goodwill in the balance sheet, and that's got to leave one day. But maybe they can take that out when they're making a lot more money. And that was the only thing I could find under my threats and weaknesses. And otherwise, it's all strengths, it's all opportunities. It's obviously good management. It's a nice niche area. The fact that they got 50%, some pros and cons there, but for now it's a good space. I think consolidated infrastructure, hot.
Electrifyingly hot for CIL. Let's move on to MTN now. Africa's largest mobile operator, the MTN Group, has reported a 4% rise in third quarter subscribers. MTN said in a statement that it had 158.6 million subscribers at the end of September 2011, up from 152.3 million 3 months earlier. MTN also said that its Nigerian unit has been warned by the local regulator to improve the quality of its services.
MTN market cap 251 billion rand, price earnings 16.6, dividend yield 4.7. Byron, let's start with you. 4.1% growth, no longer that double-digit growth that we used to get quarter on quarter from MTN. Those days are long gone. They're still a dominant player, almost 160 million subscribers. And when you look at the breakdown, it's actually West and Central Africa. It's no longer Southern Africa. MTN, we look at it as a South African company, yes, registered and headquartered here. But in terms of subscribers, certainly that Central and West Africa is down the line going to become absolutely the key part when they get those revenues up.
There's two things to note there. You say we don't have the double-digit growth anymore, but it is coming off a huge base.
Yeah, for sure.
The other thing to note is that that's for the quarter, so it's 4% for the quarter. For the year, they're looking to increase about 16%, and that equates to around about 22 million people, which is the population of the entire of Australia.
Yeah.
So people who call this company X-Growth, I think, they don't have any basis on the fact that they're growing their clients, just their clients, by 15%.
I hear you, absolutely not X growth, we can see that, but not the growth it used to be, certainly. And we had that statement, it was a year ago or so, they couldn't find big acquisitions, so they were starting to give money back to shareholders. We're almost in that double whammy position now. We've got a company that's still growing, and there's some issues around the ARPUs and the like, and they're giving us chunky dividends of 4.7.
Exactly, not the growth we used to have, but also now we've got the dividends we never used to have. But there is still a lot of potential for growth. They said that revenue from South Africa was about 22% data, and 6% revenue in Nigeria was data. And that's obviously the sophistication of the market and who has access to smartphones. So that's where the potential growth is going to come from. Smartphones are getting cheaper. You've got now the Android models that are coming through, which are a lot cheaper and are still very, very good. And that's going to penetrate into Africa, where 1 in 10 people don't have access to internet. And where they're going to get their access, it's through their phones.
Tshepo, you don't strike me as a gossip monger, but let's get your take on the rumor mill that MTN was in discussions with Vodacoms to acquire the wireless unit in the DRC. How far are they with that discussion, number one? Because neither MTN nor Vodacom has come out with a definitive statement to say yay or nay. Yep. And given the fact that MTN has a relatively bigger footprint, in fact, a much bigger footprint than Vodacom, does it really make sense for them to want to acquire this DRC operation?
I think if you're looking at it from who's managed to get the Africa story correct, I guess it makes sense that MTN has as much Africa exposure as possible. So from that perspective, I think the transaction makes sense probably for both companies. Sure, in terms of likely rumors, and I'll refrain from. I have no idea. Where
not
it's
a gossip
go.
Manga there, Tshepo, clearly.
not at all, and I'd be lying if I said otherwise. Yeah.
I want to go to Byron mentioned data. Data is absolutely brilliant. We're seeing it starting to happen. We're seeing it starting to be significant. Low margins, and there's two issues there. One side, Tshepo, is SMSs, which in truth, I mean, the carriers just make a killing. It's like 99.9% margin on an SMS. Yeah. And now there are things, BBM, there's WhatsApp on across platform. iPhone just bought an iMessenger, I think it's called. People circumventing that, and then it's again, so I got a fancy smartphone. I can phone my sister via the voice network, or I can phone her via Skype on a 3G network, and that's shifting the high margin stuff into data space where the margins are smaller.
No, they are. I think structurally these companies have to change from the core business of MTN, which has been high margin business tapping into new frontiers, into I guess mapping out the model that's we've seen with some of the global players in terms of data in particular. I think the scope in terms of data in Africa is humongous, to say the least. As soon as the infrastructure is developed and people have this demand for Steve Jobs' products and the like, I think you're likely to see data becoming a bigger issue. I think they've probably missed a step in terms of data locally. I think Vodacom's definitely been in front in terms of that space. So it would be interesting to see if they're able to translate their strategy into the rest of Africa.
Byron, relative to some other South African companies, MTN has had a lot of success in Nigeria, except now we've just received a warning from the regulator that they need to improve their services, and there's also issues around the equivalent of RICA being extended in Nigeria as well. Your take on some of the challenges in the Nigerian market and the scope for growth?
It's amazing how human nature works, where that was the focus point of the whole report. When I Google News MTN, you know, that was the main thing, was this Nigeria regulations thing. And to be honest, there's over 40 million Nigerians subscribed to MTN. If MTN was shut down there would be an absolute uproar. I think MTN have a lot stronger bargaining power than you'd think. And also, if you look back 10 years ago and look forward now and saw people being able to access Facebook, literally answer any question that they have, be able to direct themselves via GPS just in the palm of their hands with a phone, you know, people wouldn't believe you. So I think our sort of expectations of these companies might be a bit high. I mean, the service that they provide us is fantastic, and it really is life-changing.
So it sounds like you're going to give them a definitive hot then, Byron.
Definitely, yes.
Definitely hot for Byron. Tshepo, hot or not, MTN?
I suspect I'm on my own tonight, so I'm going to say MTN not hot at these sort of valuations. Look, I love the company, fantastic company, but at a PE of 20 and through the cycle PE of also 20, it's a little rich for us. So being the frugal investors that we are, we'll stay out of MTN for the time being.
Not hot for Tshepo. Simon Brown.
I love
MTN.
I love
Hot
it.
or
I
not?
own it. And Byron mentions 40 million users in Nigeria. That's almost the South African population. In 2 or 3 years, they'll have more users in Nigeria than there are people in South Africa. And he makes another brilliant point. We're putting computers in the hands of people who didn't have telephones 5 years ago. It's going to be a huge thing for the continent. And if MTN can be at the fore of that, and so far they are absolutely. I think MTN's great. They're not cheap. I'm not sure that they're ever. You might pick them up around 130. They're paying you almost 5% in dividend to hold them, so I'm comfortable to hold them. I like them. I think they're hot. I own a truckload.
Thank you, Simon Brown.